The Turkish lira hit a record low and stocks tumbled as much as 3% on Thursday after coalition talks between the ruling AK party and the main opposition failed, setting the stage for a snap election and more investor uncertainty. Separate data showed on Monday that Turkey's unemployment rose year-on-year to 9.3% between April and June, data showed on Monday, underscoring the lackluster state of an economy that has been bruised by political uncertainty. The lira, already one of the worst performing major emerging market currencies this year, tumbled to 2.8639 against the dollar, its weakest on record. The broadest measure of Turkish stock performance, Borsa İstanbul, BİST, fell as much as 3% before finishing the day down 1.4%. Technical indicators show the lira could be in for a rougher ride ahead, with charts pointing to scope for the currency to fall to 3.0 to the dollar. Markets had been hoping the Islamist-rooted AKP would be able to form a coalition with the center-left, pro-business CHP and avoid an early election. But an election now looks likely in the autumn. It's not clear when elections will be. But the idea is that it probably will act as yet another catalyst that impedes investment, said Manik Narain, a strategist at UBS in London. The big risk is that we end up having repeat elections and nothing changes. That introduces a lot of uncertainty for Turkish business and the economy. The AKP failed in June's election to win a single-party majority for the first time since coming to power in 2002. Prime Minister Ahmet Davutoglu said a fresh election now appeared to be the only option after the coalition talks broke down. He urged Parliament to back a new poll and said he would prefer it to be held as soon as possible. None of this is good news for an economy already hobbled by bearish investor sentiment. The prospect of a further period of political uncertainty adds to a daunting list of problems facing Turkey, including slow growth, high inflation, and a large current account deficit, said William Jackson of Capital Economics. 238,000 more join pool of unemployed. After years of rapid expansion, Turkey's economy has cooled considerably as heightened political unease has blunted investment. Economists expect gross domestic product to grow around 3% this year and next, well below government forecasts. Investors have been concerned by the inability of the AK party of President Recep Tayyip Erdogan to find a junior coalition partner since it lost its single-party majority in elections in June. The security situation has also worsened, with almost daily fighting in the southeast between the military and Kurdish militants. The lira, a proxy for investor confidence, has plumbed a series of record lows, hitting its latest on Monday morning when it touched 2.8495 to the dollar, bringing losses so far this year to 18%. Monthly unemployment averaged 9.3% between April and June, Monday's non-adjusted data from the Turkish Statistics Institute showed. That was up from 8.8% in the same period a year ago but down from 9.6% during March-May. Overall slow economic activity was partially to blame, Özgür Altu, chief economist at BGC Partners said in a note to clients, adding that some improvement was expected in June, due to tourism and a new harvest. The non-farm unemployment rate, also measured on a 3-month average, stood at 11.4%, up from 10.7% a year earlier and down from 11.6% in March-May.